Hey everyone, Dan here. We are in the afternoon hours of Friday, June 4th. Today we're going to take a look at BlackBerry. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And let's jump right in. So the reason I wanted to take a look at BlackBerry today was, I've seen a lot of chatter coming up about its, having the potential for big short squeeze opportunity, potential to be the chosen one after GameStop and AMC. And I wanted to look in to see sort of like what the realities are, what the chart is telling us, and what the short data is also saying. I think we should probably start with the short data because that will kind of impact how and why we talk about the chart. So if we flip over here, you see, there's a small increase in change from the previous month. And the thing that stands out most to me here is the short percentage of the float is just 9%. And as you've probably heard me say a lot of times before, if you've seen my other short and short squeeze videos, historically speaking, over 10% was sort of attention getting. Over 20% was really eyebrow raising. And so those are still the goalposts that I typically look for. And being that this is under that 10%, I know it's very close, but there's so many things that have to line up in order to effectively have a short squeeze play out from end to end. We've seen a lot of stocks that are high 20s, 30+% of the float being shorted, and still the stars can't align to make the short squeeze happen. So it puts, BlackBerry additionally against the current here. So that's the first thing that I would point out. Additionally, if we look back down here at the 2-week reporting dates, you see like a bit of an increase here, but a huge pullback in January. That's when they had that big run up to 1465, but then a bunch jumped back in when the price started to come down a little bit, seeing that there was probably a much lower floor to hit. And so, they took advantage of that, but then actually the price stabilized, came up a little bit more, so they pulled back a little bit. They didn't pull back nearly as much as they jumped in, right? So, a small fraction of what they put into it, they pulled back. So a bunch stayed in, the volume relatively stayed high, and then they've continued to add since then. The days to cover have also crept up over time pretty significantly. And now they're adding in their short positions at relatively low prices, versus, what they were adding to at this price. So, a little bit of a mixed bag, but I would really like to see this percentage that's being shorted be more like 15, 20, 25% before I would really start to think that something can be effectuated like a true short squeeze. The other factor is the fee to borrow BlackBerry is not even 1%. So there's not a great reason to, pull back and close out shares because you're incurring a high fee. So that's not really going to do it for me either in terms of like things that I look for in order to set up, the potential for a short squeeze. There's still tons leaving. This is 12:30 p.m. today. There was 450,000 available to borrow. Somebody swooped in and grabbed 425,000 of those. And so the shorts are continuing to come in. The fee is very low. You see a huge bump up. This was yesterday. And, the price has been getting dragged down really aggressively today. So right at close, there was either a big borrow after close or sort of right at the bell today. But somebody took out, or some peoples took out 1.72 or 775 million shares to short sell. So, that definitely contributes to the big downswing today. I'm sure there are some folks taking profit, but the fee isn't really doing it for me. The percentage of float isn't really doing it for me. Here, the short volume ratio, this is day to day. We did see the ratio creep up a little bit in the last 4 days, but even then, there's like not what we see in some of the other plays that we look at is high 20s consistently, not this like in the teens, and then dabbling in the 20s a little bit, and even then in the low 20s. We see a lot of these things really day over day over day being in the 20s, mid 20s, and jumping into the 30s sometimes. And that to me is more aligned with potentially being able to line up a short squeeze. So this is all just to say, maybe I'm missing something. And I'm sure I didn't exhaust all of the information out there for why people think that BlackBerry could squeeze. So feel free to comment below, and tell me what I'm missing. But that's the way that I see it currently. That the potential for a short squeeze, very minimal at this moment. Potential for a big run up because it's being hyped as having opportunity to short squeeze. That's sort of what I feel like we saw here, taking it from about $9 or $10 and doubling the price by pre-market yesterday. But yeah, that's I don't mean to like burst anyone's bubble, but again, maybe I'm missing something. So if you know something else, like please let me know, and we definitely can account for that. Big gap was left exposed here when it had that big run up. If you can't tell, I'm going to transition into the chart to see what we might look for in terms of bounce zones, upper price targets, that sort of thing. Big gap that was left here, came down, filled it basically at open yesterday, or, during the first half of the day. Did have a nice bounce, but again, I think this is all hype-related stuff. I don't think that these are like short squeezes playing out at least from the data that I see. And I don't think that there's any point in us looking at a longer term chart, which is why I have this 5-day, 5-minute chart up, because, the brunt of this big run up just lives in this smaller time frame. So we're not going to glean anything from those longer time frames. It is stuck right now in a little bit of this down channel. And I know it's trying to kind of work itself out of it, mostly sideways, but still a little bit sideways and down. So in terms of like potential for flagging out, there's a couple of things that could happen. One, could continue to make these lower lows, but still push out basically after hours, or could get some stabilization on a support line, which I would see right here. There should be one, and I think there's a stronger one here. So that's, what I would look for to be the more probable scenario, is that it comes down, gets to something like 1407, and then some buying pressure comes in there. So I would turn that purple as, I'd look for as a potential bounce zone. If it does start to reverse, what I would look for on the upside, if you are looking for additional areas to either sell into or buy into, 1553, I would expect us to see some resistance there. 1644 and about 1740, mid-17s. If it can get there, which is going to be a big percentage gain up, then we can reassess. But this is how I see it for now. And just to clarify a little bit more how these upper zones can help. If you're looking for an entry, what I would first do is see what the price action does at 1407. This is how I would play it. If we get a decent bounce there, especially if it bounces out of this downtrend, I would take that as a strong indication that this could be a good play to get into. There might be some short-term potential, but potential nonetheless. If it does have like a bounce up and tests like maybe that 1644 and can't breach it, what I look for then, why I keep these on the chart, this 1553, you're likely to see it come down and retest that level. And then if it starts to bounce, you see a green candle or two come into play. That's when I would say, okay, I think we're gonna play out this bounce right now. So I'm gonna see it go up. So then you may see it go up here. And then, if you're looking for a position and it's there, look for it to come down and potentially hit that 1644 zone and bounce. And again, it's not always right on the price itself, but, in a few cents range there. So that's the way that I play it. I treat these a couple of ways, either as sorry, I actually hit the stop recording button instead of the escape button to get rid of the line that I was drawing. So slight interruption there. But anyway, I was saying, I use these not only as upper price targets to maybe trim my position or sell out at and take profit, but I also use them as, if the price goes by, I look for it to come back and push into that area. And if it shows some strength after pushing into that area, then I go ahead and, position myself for a bounce entry and use it for a buy zone as well. So hopefully that makes sense. But this is what I'm seeing in BlackBerry. Again, I know there is short interest. There are shorts that are doing their thing with the float, but I just don't think that the fee or the percent are high enough to really have enough juice for the squeeze to play out. But we'll see. Again, please comment below if I'm just missing a big piece of this puzzle, and that'll be good for anyone who comes by to sort of see that information in the comments. And maybe it will kind of counterpoint me saying that I don't see the factors setting up. All right, well, thanks for watching. I hope you have a nice weekend, and I will see you in the next video.